Now, before we leave off, let's go ahead with the market minutes for the last week, because there's all kinds of news that happens. Not as interesting as all-time highs in Bitcoin and Nasdaq and all that, but important nonetheless. So Trump imposes a 35% tariff on Canada. Oh, boo. President Trump's 35% tariff on Canadian goods, alongside 15 to 20% global tariff, raises concern about trade disruptions impacting industrial and commodity stocks. Short Canada, short Canada. U.S.-Vietnam trade agreement reduces tariffs. A U.S. agreement with Vietnam lowered tariffs from 46% to 20%, easing recession fears and supporting market gains. The 30-year Treasury yield hits 5%. Yields on a 30-year Treasury bond reached their highest since 2007, driven by concerns over rising U.S. debt from proposed tax and spending bills. Hey, trillions and trillions of dollars over the next 10 years gotta show up somewhere. Although the fact that it's only 5% on the 30-year seems pretty low, but hey. Did you know there's this whole thing that if interest rates hit 6% or more, like that's supposed to spell the downfall of a currency? Have you heard this?
No.
Okay, so don't worry about it. Don't trouble your pretty little head.
Well, are we close to that?
We're at 5% on the 30-year. I think it needs to be 6% on the 10-year. I'm not exactly sure about that. Some things I don't know for a fact. Some things I just saw on Twitter. Sort of passed by on Twitter. Gold surges as reserve asset. Gold outperformed as central bank stockpile reserves, surpassing the euro as the second leading reserve asset, boosting gold ETFs. Just a mention here about gold. The fact that gold hasn't cratered, right? If gold doesn't crater, gold stays flat or goes up while we get to all-time highs and the dollar is falling, that means there is mistrust with the global financial system, the solvency of the financial system. Remember, when number go up, people have to chase number go up. Because if you work as a money manager or whatever it is, you're working a prop firm, whatever it is, and you are supposed to be making money to beat the stock market, and the stock market is beating you, they hand you your box, you pack it up, and you go drive an Uber or whatever you need to do. Get another job. Because why do they need to pay you if you're not beating the stock market? So high prices, people chase into it because they need to goose up the books, get the numbers to look better, and at least get close to or at the benchmark, because otherwise, why do you need you? However, so the stock market can be up, equities can be up, while gold still starts climbing up because people go, hey, well, we're up, but the things that are happening economically gives us less faith within the financial system. Trillions and trillions more dollars now are going to be issued or allocated through the federal budget. This does not lend, doesn't make you think highly about the financial system. And so in order to hedge against that, you buy gold. Oh, and the major people who buy gold, do you know who the major people who buy gold are? What really moves the gold price?
Central banks?
Central banks. It's not on Papa who are getting Krugerrands inside of their safety deposit box that's making the gold ETFs go up or the gold futures go up. It's freaking central banks. Okay. Crypto stocks rally. Coinbase up 12%, Marathon up 4.9%, MicroStrategy up 2.7%, surge amid broad crypto market strength and stablecoin legislative news. I find it very hard. Well, we know some people who are making money like in the crypto markets and equities. All these strategies of selling calls, selling puts, raking in cash as the market goes up. I'm not participating in that, so I don't know a huge amount about that. But if you're more comfortable using equities as a vehicle for your crypto exposure, there's a lot of options now. Levi stock jumps 6.7%. Levi Strauss & Co. gained 6.7% after strong earnings, reflecting consumer sector resilience amid tariff uncertainty. Services sector PMI rebounds. The U.S. services sector PMI rose to 50.8 in June, signaling growth and supporting broader market confidence. I love that 50.8 growth. Yeah. It's about as close to barely any growth as possible. So you say there's a chance. NVIDIA leads tech rally. NVIDIA stock rally drove the NASDAQ to new highs, reinforcing tech sector dominance and AI investment themes. Russell 2000 is breaking out. U.S. current account deficit widens, and so on and so forth. Just all the things you would normally expect at the beginning of a euphoria phase in equity markets. It's a great time to be alive if you're a trader and exposed to markets. And if you're not, I don't know what those people think. They must think to themselves, excuse me, what? I'm trying to figure out what bridge I want to sleep under, and you have all-time highs in the stock market. Microsoft laid out 9,000 people, all-time highs for the stock, company bonuses. So I don't know. It's kind of hard for the regular folks. I get that. But there is a solution to that. Buy stocks, baby. Buy Bitcoin.
Not financial advice. Do your own research.
Not financial advice. Do your own research. There, I said it. All right.